Good evening, boys and girls. So, how are you, students? So, as usual, guys, you can talk to me in last half an hour of the session, and during the first 2 hours, if there are any queries, you can send on the BOS mail. So, students, we have already done 2 chapters of auditing of this paper. The name of the paper is Auditing and Ethics. We have done first chapter, nature, objective and scope of audit. Therein we had understood the meaning of audit, nature of audit. We had understood that auditing is an assurance engagement, that it provides reasonable assurance. We had also learned about standards on auditing, what standards on auditing are all about. We had also learned about inherent limitations of an audit of financial statements. And similarly, in chapter 2, we had read about audit strategy, audit planning, audit program. We had also understood the distinguishing features of audit strategy and audit plan, what is included in audit plan. So today, students, we are starting a new chapter. We shall take an overview of a new chapter, that is chapter number 3, risk assessment and internal control. So chapter name is risk assessment and internal control. So students, tell me first of all, what do we mean by risk? You can send your responses on BOS mail. What do we understand by risk? Yes, Kopal, you are asking that it is your first class. So Kopal, my advice would be to you would be to first do chapter 1 at least. Then you will be able to understand the things. Yes. What do we understand by risk, guys? What is your general understanding of the word, of the term risk? What does it denote? Just do not go by the book meaning. Just tell me on the mail, what do you understand by risk? No, Krish, you are saying risk of any misstatements. I am talking about, I am not talking about audit risk. I am just talking about the term risk. What this term mean? Yes, Shambhavi, you are saying loss. Any other opinion? What do we mean by risk? How would you define risk? What does this term, what does this word denote? Anyone? Yes, Nikita, Rohani. Yes, Rohani, you are writing chances of some negative to happen. Yes, Priyanka is saying risk means exposure of danger. Yes, that's correct. So risk means a probability of something adverse happening. Probability of something adverse happening. Something adverse or something negative happening. So what is probability? Probability means chance. So chance of something negative happening is definitely risk. So we know the terms business risk, health risk, safety risk, security risk. So there are financial risk, there are all type of risks. So similarly, students, there is audit risk. Similarly, there is audit risk. Now, what does this term denote? Audit risk. Yes, Aisha, you can join through any mode. So the audit risk, the term audit risk means the risk that an auditor might give an inappropriate opinion when financial statements are materially misstated. So remember guys, what is the objective of an audit of financial statements? Objective of an audit of financial statements is to express an opinion through the medium of audit report. Now, if there is a risk that the auditor may express an inappropriate opinion, may express a wrong opinion when financial statements are materially misstated, it is known as audit risk. So it means the purpose of audit of financial statements may get defeated. Okay, because the auditor is to express proper opinion on the financial statements through the medium of audit report. But if he doesn't express proper opinion, then there is a risk of failure of audit. So this risk, this chance, this probability is called as audit risk. Clear, guys? So tell me, can we eliminate this risk completely? Yes. Any idea, guys? Can we completely eliminate this risk? Can this risk, which is known as audit risk, can it be completely eliminated? Yes, anyone? No, Sadab, Priyanka, you are saying, Rohani, you are saying that we can't completely eliminate this risk. That is correct. Now, my next question is why it is so? Why we can't completely eliminate audit risk? Because obviously, as an auditor of financial statements, I I wouldn't want that there should be any risk. So why we are not able to eliminate this risk completely? Yes, Anup, you have also written correctly. So why we are not able to eliminate this risk completely? Yes, Priya, you are writing correctly. We can't eliminate it completely, but we can reduce it to a low level. But my question is why it is so? Now try to link it with what you have read in last two chapters. So I am giving you a clue. Try to link it from a concept which you have read in one of the last two chapters. Yes. Anup, you are right. Anup is saying because of the inherent limitations of audit. Because the process of audit suffers from certain inbuilt limitations which we have read in chapter 1. like nature of financial reporting, like it involves financial statements are prepared on the basis of judgment. Lot of judgment is involved. There are limitations to internal control. Okay, so such things we have read, and because of the nature of audit procedures itself. Okay, so auditor works on a performs procedures by selecting samples. So therefore, audit risk cannot be eliminated, it can be reduced. So guys, this is a very important point which you have to understand. So an auditor of financial statements, he would always strive to reduce audit risk to an acceptably low level. So he would try to reduce the chances of failure of his audit. That is, he would try to reduce the chances that he may express an inappropriate. Is that clear, guys? Clear, guys? So this is a very important point, guys. From examination point of view also, you have to remember that audit risk cannot be eliminated. It can only be reduced. Okay. And also remember that audit risk would be present in every audit of financial statements. It would be present in every audit of financial statements because of inherent limitations of audit. Clear, guys? So audit risk, students, is formed of these components. One is risk of material misstatement. And another is detection risk. Now, risk of material misstatement is again, yes, Krish, your answers are reaching. Please do not get impatient. Again, two components, that is inherent risk and control risk. So audit risk is a function of risk of material misstatements and detection risk. Now, what is risk of material misstatement? What is risk of material misstatement? Risk of material misstatement, simply understood, it is the probability, it is the chance that financial statements are materially misstated prior to audit, before audit. So like you know that financial statements is responsibility of management. So draft financial statements have been say provided to an auditor, and uh, say some expenses which ought to be debited to the machinery account, these have been debited to machinery repair account. So expenses have been inflated, profit has been reduced. So this is the there is this is known as risk of material misstatement, that the chance that financial statements are misstated materially prior to audit, before audit. So the important word in risk of material misstatement, guys, you have to always keep in mind that it is prior to audit. Before audit. And risk of material misstatement can be again divided into two components, that is inherent risk and control risk. Now, what is inherent risk? What is the meaning of the word inherent? First of all, we start from the word inherent. What is the meaning of the word inherent? Tell me, guys. What do we mean by inherent? Yes. Anyone? What is meaning of inherent? So inherent means, guys, inbuilt, yes, coming from within. Yes, you are saying right, Krish, Ruhani, and Priya. So guys, like some transactions are inherently risky, like say cash transactions, like say transactions involving complex calculations. So these calculations are inherently risky. These carry more risk than others. Others are also risky, but their degree of risk may be low. Okay, like say the model of business is such that it may be inherently risky business. Like some entity, some organization is engaged in such kind of business that not much success has been achieved in such kind of businesses, then such type of business is inherently risky business. So this risk is known as inherent risk. Clear, guys? So what is control risk? So as I had explained to you in a very first lecture, and today we shall also be discussing that an entity, an enterprise has a control system for running the entity, for running the organization. It has a system of checks and balances. It has devised policies and procedures which are in place for effective and efficient running of the business of organization, for safeguarding assets, for reliability of financial reporting. So because you understand that no entity would like that frauds would take place in it, that its employees engage in fraudulent activities, so that ultimately its business suffers, the company loses its goodwill. So the company, the organization, or any organization, it has got it develops an extensive internal control system for running its affairs. So what is control risk? Control risk is the chance, is the probability that the controls do not operate effectively, controls do not operate properly, or they are not able to detect material misstatements. Okay, so this is control risk. And what is detection risk, guys? Detection risk is the risk that whatever procedures which are planned by the auditor, they may not be able to detect material misstatements during the course of audit. Like suppose I am an auditor, I have planned certain procedures, like I would say, look, I would inspect last year's balance sheet, I would send external confirmation, I would attend physical inventory count, But still, there may be a possibility that the procedures which I have planned for carrying out, for performing my audit, are not able to detect material misstatements which are present in financial statements. So such risk is called as detection risk. So such risk is called as detection risk. The risk, the chance that an auditor may fail to detect material misstatements by the procedures which have been planned by him. So this is called as detection risk. Like I may have selected some sample, but for testing the transactions, but that samples may not be representative of the whole of the population. Because why? Because there is sampling risk in it. Or I have adopted some inappropriate procedure which was not appropriate, which was not required, which was not correct. So such kind of risk is known as non-sampling risk. So detection risk comprises of sampling risk and non-sampling risk. Clear, guys? So you have understood the meaning of audit risk and its components. So mathematically, it can be represented as audit risk is equal to risk of material misstatement multiplied by detection risk. Or you can expand it, because risk of material misstatement consists of inherent risk and control risk. So you can say audit risk is equal to inherent risk into control risk into detection risk. Now tell me, guys, what kind of relationship do you see between risk of material misstatement and detection risk? Say if I ask from you a question that in financial statements the auditor thinks that risk of material misstatements is high. So what is the relationship between risk of material misstatement and detection risk? What should be effect on detection risk? Whether he should keep detection risk low or high. If risk of material in financial statements is high, if the auditor thinks that risk of material misstatements in financial statements is high, then should he keep detection risk at high level or low level? Yes, tell me. Anyone? Yes, Priyanka, Priya, Ruhani, Krish, Praful, Sadab. Oh no, Anup, you are saying should be. Yes, guys, do you agree with Anup? Anup is saying if risk of financial statements is high, then detection risk should be at high level. Do you agree with him? Yes, Krish, Sadab, Priyanka, Priya, what is your opinion? Here we are getting it wrong. Here you are getting it wrong. There is inverse relationship between risk of material misstatement and detection risk. say, guys, detection risk is failure of planned procedures. The probability that planned procedures may not be able to detect misstatements in the financial statements. So if the risk of material misstatements in financial statement is high, so I have gone through the financial statements and I have seen, look, last year sale was 50 crores and this year sale was is 100 crores. So first of all, my concern would be whether this revenue which has been booked in the financial statement, whether it has occurred, whether it is genuine. So I as an auditor, I have assessed the risk of material misstatements in revenue. So at what level I increasing my area of checking. I would be drawing large samples and I would increase my area of checking. And it would mean that I would keep my detection risk at low level. So you understand, guys, it would mean that I would be keeping detection risk at low level, that there is a very little possibility that no misstatement goes unnoticed on my part. So I would keep that possibility at low level, not at high level. Yes, now Priyanka and Priya, you are saying it correctly. So because what now, remember chapter 1 students or our recent discussion. Now all of you in your opinion in saying that an auditor keeps audit risk at low level. Okay. So the objective of an auditor is to keep audit risk at low level. This much you have understood, this you agree. So you have also understood mathematically that audit risk is equal to inherent risk into control risk into detection risk. Now if this risk, now this is risk of material misstatement. Now say if this risk is high and I also keep this risk as also high, so my audit risk would increase manifold. So if risk of material misstatement is high and I keep detection risk also high, detection risk means risk chance that the procedures planned by me do not detect material misstatements in the financial statements, that whatever I have planned, whatever procedures I have planned, when I would perform them, they would not be able to detect material misstatements in financial statements. So I would keep my detection risk at low level. Do not confuse the term detection with detection risk. Yes, Praful, is it clear to you now? So I would keep my detection risk at low level because I have assessed risk of material misstatement to be high. There is a chance that financial statements may be materially misstated. So I would increase my area of checking. I would increase my size of sample. so that at least detection risk is low. And always remember, guys, that only risk which is in the hands of auditor, which these are both internal risk and control risk. These are both organization risks. These are the entity is carrying out its business. It is, can you do anything about it? You can't do. They are recording the transactions. They are responsible for recording the transactions. And the management, the company, the entity is responsible for maintenance, for development of internal control, for safeguarding of its assets, so that its business is run effectively and efficiently. Okay, so neither inherent risk can be influenced by the auditor. These are entities risk. So what is left by the auditor to be influenced is audit risk, detection. It comprises of the procedures. He has to perform the procedures. He is responsible for devising the procedures to conduct an effective audit. Okay. So students, I hope you have understood this concept of detection risk, and you also see the and any student who still has some doubts, they can ask in last half an hour. They can talk to me in last half an hour. So again, students, I'll show you mathematically how how there is inverse relationship between risk of material misstatements and detection risk mathematically. Okay, so we have learned that audit risk is equal to inherent risk into control risk into detection risk. So if from this mathematical equation, if I have to calculate detection risk, then how I would calculate? Okay. So what is the relationship between detection risk and the risk of material misstatement now? If I write it in short, ROMM. Now, whether it is direct relationship or inverse relationship, tell me. Yes, Sadaf, Praful, is it clear to you now? From this mathematical equation, can you understand now the relationship between detection risk and risk of material misstatement? Yes, Priyanka, Krish, you are saying inverse relationship. Correct. Now you have understood. Yes, Praful and Sadab, now it is clear to you. And not only this mathematical formula, this is just for making the things clear to you. You have to understand how this relationship works. What is the meaning of inverse relationship between risk of material misstatement and detection risk? So Saddad, you are saying you have understood, but you didn't understand the reason. So I would again explain to you the reason. Say, if financial statements, draft financial statements come to me and without performing any procedures. I am in the initial stages. The audit is in initial stages. Okay. So the first step for auditor is to identify and assess the risk. Identify and assess risk of material misstatement. Then he designs procedures. Like first he would have a look, he would inspect or he would perform some elementary procedure to assess that where are the chances of misstatements happening. So this is risk of material misstatement. Like I had also given you an example that if sales of an entity last year it was 50 crore, during this year of which you are an auditor, these are 100 crores. So obviously you would become alert. You would assess that there is a chance that fake sales may have been booked. So first of all, uh, you would ensure that these sales are genuine, that these sales have existed. So you would assess this area as a high risk area. You would assess risk of material misstatement as a high, because if sales are fake, it would affect many items of financial statements. There would be impact on profits. There would be impact on debtors. Okay. Yes, Ritu Singh, you are saying I am Hindi student. So Ritu, you can, this is a pan India class. So anyway, I will try to explain in Hindi also. But you try to gain understanding, and if you want to understand something in Hindi, then you can talk to me in last half an hour. So clear, guys. Now it is clear to you. So say last year we were considering this example. Last year turnover was 50 CR. Now it is 100 CR. So say I have assessed that risk of material misstatement is high. Now I would try to keep, now my objective is to keep audit risk at low level. So for this, I would keep my detection risk at low. So for keeping my detection risk at low, I would increase my area of checking. Isn't it? I would increase my area of checking, say regarding this point, because I have determined it to be a significant area. I have determined it to be a significant risk. So I would plan my procedures to ensure that there are no misstatements in this area. So what I am doing, I am keeping my detection risk at low. What is detection risk? The probability that my procedures are not able to detect material misstatements. So definitely I would be keeping this probability as at low, that adverse thing happening at low. I would not keep this risk at a high level. Isn't it true? Yes, Sadab and Praful, is it clear to you now? Okay. So another thing, guys, you have to remember regarding this concept of audit risk is that that this concept is used to mean to refer to the process of auditing. It does not mean auditor's business risk. Like say an auditor expresses wrong opinion. Okay. An auditor expresses inappropriate opinion. There are frauds or error in the financial statements, but he gives a clean check to the company. He expresses an inappropriate opinion. Okay. So as a result, he is say by ICAI or by some government authority, the loss of reputation. So such kind of things do not fall within the meaning of audit risk. These are so whatever auditor is doing, whatever he is performing, okay. So if there is a loss of reputation of him, or there are some legal consequences to him because he has not conducted his audit well, because he has not performed his procedure, this is not audit risk. This is not covered in audit risk. This is auditor's business risk. This is a consequence of him not performing the work, not performing the professional work in accordance with the standards on auditing. Now, in this case, the audit risk has already materialized. He has already expressed inappropriate opinion. So audit risk, which was there before the start of audit, it has already materialized. It has fructified. Yes, Anup, you are saying. Yes, Ashok, there are queries from students that my voice is breaking in. Please see at your end. Is the voice okay? So our technical team is saying that voice is okay. So there must be some issue at your end, guys. Some connectivity issue. Yes, Anup, you are saying why can't auditor keep detection risk at low level always, and why only when ROMM are high? Yes. Say, guys, now I answer in this way, Anup. Say if the auditor assesses risk of material misstatement to be low. Say, now I take a opposite example of the as compared to one we had taken earlier. So last year, say, simple example, 31st March 23, turnover was say 50 crores, and this year it is around the same level. Say it is 51 crore. All other financial indicators are say also on the same level as these were on the previous level. So say I as an auditor, after seeing the financial statements at the first sight, after inspecting the financial statements, I assess the risk of material misstatements to be low. Okay, I say that risk of material misstatement is low because nothing has much changed in the business of the company. And last year also I had applied proper procedures, I had applied appropriate procedures, and the audit was conducted. And this year also there is no significant change. The company is in the same business, the turnover is at the same level, the payments from trade receivables are coming, the company is paying its liabilities on time. So I have assessed risk of material misstatement to be low, that there is a low probability. So now there is a liberty to me that I can keep detection risk at some bit high level. I can reduce the area of my checking because I have got an elementary satisfaction that risk of material misstatement is low. So I can keep detection risk at high level, at some bit high level. I can select small size of sample. I can reduce my area of checking. Yes, any student who wants to get it explained in Hindi, they can talk to me in the last half an hour. Okay, because it creates disturbances to students who do not understand Hindi. So guys, if you have taken English medium for writing in the exam, so obviously you should understand in English. Yes, guys, the point is clear to you, Anoop. Yes, Anoop, the point is clear to you. Okay. So this was all about, guys, audit risk and its components. Okay. Now tell me, guys, how does audit, how does an auditor assesses risks? How does an auditor assess risk of material misstatement? So guys, as I had told you in the first lecture, that um, that all your chapters are based upon essays. Like chapter 1 was based upon largely upon essay 200, and chapter 2 was based upon essay 300. Now this chapter, chapter 3, risk assessment and internal control, it is based upon essay 200, essay 315, essay 320, and essay 330. So we shall be learning a little bit about all these things today. So the concept of audit risk and its components, risk of material misstatements and detection risk, is dealt in essay 200. Okay. And essay 315, it deals with, the name of this essay is identifying and assessing risk of material misstatement by understanding the entity. Okay, through understanding the entity. So the name itself, the description itself denotes that what this essay is all about. So essay 315, standard on auditing 315, deals with identifying and assessing risk of material misstatement through understanding the entity. So now, students, why understanding the entity is important? Tell me. Why under the view of an auditor? So guys, you have heard one term in the banking. You have heard KYC. You have heard the term KYC, know your client. So in banks, there are KYC norms which are prescribed by RBI. So similarly, we can say that auditor has also to know his client. So if you do not know about the nature of the business, if you do not know about the promoters, if you do not know about the, say, the how, what is the process of the company, how the company operates, what are its customers, say the, if the company is a manufacturing company, then how does it produce its finished product, what is the machinery involved in it. So if you do not know the basic things, or if you do not know from which sources the company has taken finance, okay, so how you would be able to conduct an effective audit? So therefore, knowing a client, knowing your client is very important. It is the foremost requirement of audit. Remember always, guys, it is the foremost requirement of audit. Clear, guys? So the auditor identifies and assesses risks by means of risk assessment. So the procedures which are used by the auditor to identify and assess the risks are, to identify and assess risk of material misstatements are called as risk assessment procedures. Okay, so guys, four types of risk assessment procedures can be there. We have also discussed it earlier also. Number one, inspection. Number two, observation. Number three, inquiry of personnel within entity. Number four is analytical procedures. So what is the meaning of all this? Inspection means just to have a look, to inspect something. Now say I am looking at some of the documents of an entity. So what I'm doing, I'm inspecting. Say I am perusing financial statements of a company of past years. So what I'm doing, I'm inspecting. I'm going through books of accounts of the company. So what I'm doing, I'm inspecting. So, and what is observation? Observation means seeing some process being performed by others. Like, say, I visit the factory, I visit the works of a company, and say, I see how the manufacturing is carried out, or say, I observe the physical inventory count process which is being conducted by the management. So the management people are conducting physical inventory count, and I am just observing that how these people are doing their work, what they are doing, how think, okay, what are how basically I am trying to see how they are performing the work. Okay, so this is known as observations, seeing the process being performed by others. Like say take another example. Say I go to a bank as an auditor, and I see how employees are functioning. Okay, say I see that when an employee sits on the terminal, he logs in, he punches with his employee login, he enters the password. Okay, and he say he authorizes some voucher. So what I am doing? I am just observing what the employee is doing. Okay. And number three is inquiry of personnel within the entity. Say inquiry means to ask from other people within the organization. Say if there is a legal department within the organization, and I ask from the head of that department that are there some pending cases, legal cases against the company. So I am making an inquiry. Or say I ask from the sales personnel what is the position of orders in hand with the company. So I am making an inquiry of the persons within the company. I am making a plain inquiry. Okay, it may be an oral inquiry, it may be a written inquiry. And analytical procedure, guys, these we would be doing in detail in your next chapter, chapter number 4. But you understand when an auditor tries to establish relationship between some financial statement items, okay, using say financial data or non-financial data, then he is performing analytical procedures. Like say I as an auditor analyze gross profit ratio of last 3 years. So what I'm doing, I am performing analytical procedures. Gross profit, you guys, you know, GP ratio, say year 1, year 2, year 3. Say sales are 10 crore, 15 crore, 20 crore, and gross profit is say 2 crores, say 3 crores, or say 4 crores. So GP ratio is GP divided by sales. So 2 divided by 10, 3 divided by 15 into 100. So I am analyzing this sort of ratio. So these kind of procedures are known as analytical procedures. Or like say, say I am seeing the trend of purchases during the whole year, or I am seeing trend of purchases of current year with the last year. Okay. So these are all risk assessment procedures. So remember, guys, these in fact are audit procedures. It is not a special category. These are audit procedures. But when these are used to identify and assess risk of material misstatements, these are called as risk assessment procedures. I am at the cost of repeating it, I am again saying it, that the purpose of risk assessment procedures is to identify and assess risk of material misstatements. ओके तो इससे तो सिर्फ इतना ही है कि आपको ये करके कि रिस्क है कि नहीं है, उसके बाद आगे की बात हम अभी बाद में करेंगे. सो क्लियर गाइस? इज इट क्लियर टू यू गाइस? Yes, guys, is it clear to you so that we can move forward? Now, another term is, guys, that it is in the heading of the chapter. What was the name of the chapter? Risk assessment and internal control. Okay. So Second part is internal control. So what is the meaning of internal control? So internal control is a process, remember guys, which is designed, implemented, and maintained by management. So always these are three keywords, guys. So you can prepare your own acronym, like say I prepare an acronym DIM to remember. So internal control is a process designed, implemented, and maintained by management. So be careful in your understanding that management is responsible for designing, for creating the process of internal control, for implementing it, and for maintaining it so that it is carried out properly. Okay, so it is a process designed, implemented, and maintained by management for reliability of, for ensuring reliability of financial reporting. And for effective and efficient carrying out of its operation. For safeguarding of assets. And for compliance with laws and regulations. So this process, internal control, is meant to ensure these things. Now again, go to the basics, guys. Whose responsibility is to prepare financial statements? Management. So management is also responsible for reliability of financial reporting. That whatever financial reporting is made, whatever financial reporting is presented, it is reliable. The primary responsibility is that of management. So management devises a process, a system, a policies and procedures to ensure reliability of financial reporting. That there are no errors, that there are no frauds in the financial statements. Okay, so they must be devising their own systems, systems of checks and balances, that employees do not misappropriate their assets. So safeguarding of assets are there, effective and efficient carrying out of operations. So if they are not able to carry out their business functions efficiently and effectively, then their business objective would be defeated. So this is the operational part. And compliance with laws and regulations, it is also very important, guys, because if some internal control system is not capable of complying with laws, then it might create huge implications for that organizations, huge effects for that organizations. Like say if an entity, I give you an example, if an entity doesn't say file its GST returns on time, So there are implications under GST law. So if it doesn't deposit its monthly TDS, then there are implications under income tax law. So therefore, there has to be a system within the organization, within the entity, to ensure all these four things. So clear, guys? Yes, is that clear? Now tell me, students, uh, is internal control system a perfect system? Or there can be lacunas in it, there can be shortcomings in it, or there can be limitations in it? Yes. Yes, students. Any response? Yes, Sadab, yes. There are limitations to an internal control also, in an internal control also. Why? Can you think of some limitations? Say some organization, some company has devised a system, has devised policies, procedures, different, it has devised procedures for different departments, say for the purchase department, for the production department, for HR, for marketing department, so that its business objectives are achieved. Okay, so that say it doesn't lose its customers, its sales increase, it earns handsome profits. So whatever are the targets of that business, whatever are the objectives of that business, these are achieved. So what could be limitations of internal control? Can you think of any limitation? Yes, yes, guys. Yes, Surichi, I am getting your message. Yes, Sadab is saying human involvement. Yes, that's very true, Sadab. We humans, wherever humans are there, human element is there. Obviously, we tend to bypass the controls. So some two persons may collude. So in auditing, there is a word, guys, collude. Collude means, Hindi meaning of collude is mili bhagat, mil jana. Okay. So suppose the management has devised a system that that its work is carried out properly, and say whatever goods are purchased, first of all, the gatekeeper, the secure, or keeps makes an entry. Okay, and then goods are received in the receiving department, and there again a person checks the goods as to their quality. Say again these are checked by a supervisor, and then he says that these are the goods which are as per order. Okay, then he okays those goods, and then the bill goes to the appropriate authority for passing. Now, if some of these persons collude, then they can bypass whole system. Okay. So this gives rise to the limitations of internal control. Or there can be another reason. Say the management has devised some control, but the employees have not understood that control. They have not understood the objective of that control. ओके, सो उनको मालूम ही नहीं है उस कंट्रोल का इंपॉर्टेंस क्या है. So they do not know what is the importance of that control. So again, So when employees have not understood the importance of a particular control, so obviously they would bypass that thing, or they would not perform that function properly. Okay. So always remember, guys, that internal controls also suffer from limitations. These can never be perfect. These can never be perfect. Okay. There is always a possibility of collusion. So, guys, again, this again takes us to the concept of inherent limitations of audit. Because nature of financial reporting is such that it is based upon the satisfactory working of the internal controls. So if the working of controls is not proper, then there is chance that financial statements may be misstated. Okay. Yes, Praful, you are saying in our country bank fraud always come. It means internal control is weak. No, internal controls are quite strong in our banking system, but still frauds do happen because some unscrupulous persons, some dishonest persons, they collude and they exploit whatever little weakness is there in the system. Okay. Otherwise, there are very strong controls in the banking system. That is why the money of public is safe. That is why you are able to keep your money in the banks. So there are exceptions everywhere. So this is what we are talking about. Except remember, and full exceptions only prove the rule. So if say a fraud happens in 2-3 years, then it means that for that period the system has worked satisfactorily. Okay. And remember the enormity of funds in the banking system. Yes, guys, is it clear to you? And students, you would be wondering that why we have studied this concept of risk of material misstatement and audit risk. So why we have studied the concept of risk of material statement? Yes, can you tell me? Can you tell me, guys, why we have studied this concept of risk of material misstatement? What is significance of it? Yes. Why we have studied the concept of risk of material misstatement? So students, auditor has to document. He has to document risk of material misstatement as part of audit documentation. So that is how the process of audit works. So usko, the auditor has to state in his working papers like that he has assessed risk of material misstatements at overall financial statement level or and at assertion levels, at different assertion levels, high and low. So what kind of risk he has assessed, so that so that it shows the proper sequence, it shows the trail, that what procedures he has designed in response to those risks. So what procedures he has designed in response to those risks. So clear, students? So audit, always remember guys, this is also very important. This is also very important that an auditor has to document, he has to put into writing in his audit file as part of audit documentation risk of material misstatement at financial statement level and at assertion level. Clear guys? Yes students, any doubt about that? And another thing about audit risk is, students, you have to remember that it is not capable of precise measurement. Always remember that it is not a some figure, not something which you have to precisely determine. It depends upon auditor's professional judgment. It depends upon auditor's professional judgment. Now you would say, what is professional judgment? Now professional judgment, what you are studying. So when you would become chartered accountants, you would before becoming chartered accountants, you would be undergoing through your articles, you would be going through training, and you would be having practical experience, you would be passing the exams. So when you qualify as a chartered accountant, you have requisite knowledge and experience. And when you are in, say, active professional life also, so you gain by experience. So all these things contribute to professional judgment. So all these things contribute to professional judgment. Okay. So this is also important concept. Guys, remember that audit risk is not capable of precise measurement. Do remember, questions can come to you in exam. MCQ can be framed also on this part. Priyanka, you are asking if management wants to save a copy of the audited documentary, then no, probably you are talking about audit working papers, audit documentations. So these are the property of the auditor. So the auditor can share it with under certain circumstances. We shall be doing this topic in detail when we shall come to chapter 6. Okay. So guys, this we have learned that an auditor identifies and assesses risk of material misstatement in accordance with SA 315 by performing risk assessment procedures. Now, after he has identified and assessed the risks, now what is the next logical step to do? Yes, tell me. Yes, Sadab, you are saying auditing is a risky field. Yes, you when you become an auditor, you have to perform the work with professional skepticism. You have to be alert all the times that you may not be caught off the guard. So students, tell me, when auditor has identified and assessed the risks of material misstatement, what would be the next logical step for him to do? So you have read in chapter 1 that auditing is a logical process. So I, as an auditor, I have identified and assessed risk of material misstatement. Okay. Say I have assessed risk of material misstatements of at overall financial statement level to be high. Okay. Then what would be the next logical step for me to do? Yes. So I have just assessed the risk. I have just now assessed the risks. Now, what would be the next logical step for me to do? Yes, Priya, right. Like this. So, students, your mind should work like this. Okay. So, next logical step for me would be to uh, to design procedures in response to the risks. Okay. And what design procedures, and then I would perform those procedures. So all these things are dealt within SA 330. So name of SA 330 is responses to assessed risks. So remember, SA 315 deals with identification and assessment of risk, and SA 330 deals with designing and responses to assessed risks which have been assessed by performing risk assessment procedures. Clear? We have just now understood risk assessment procedure, four kind of risk assessment procedures: inspection, observation, inquiry of persons within the entity, analytical procedures. So now SA 330 deals with designing and performing procedures. Okay. So this takes us to further audit procedures. This takes us to further audit procedures. Now, as far as audit procedures are concerned, there are risk assessment procedures. These are also audit procedures. Always keep these things in mind. And there are further audit procedures. And further audit procedures are again divided into tests of controls and substantive procedures. and substantive procedures are again divided into substantive analytical procedures and tests of details. And these are again divided into tests of transactions and tests of balances. Okay. So once auditor has identified and assessed risks, so his response would be to design and perform further audit procedures. Now, further audit procedures fall into two categories: tests of controls and substantive procedures. Now, what are tests of controls? Tests of control, students, simply mean that whatever controls the management has devised, they are performing effectively. Whether these are capable of preventing material misstatements, or whether these are capable of detecting, uh, preventing and detecting material misstatements. So tests of control simply means that the policies, the procedures which the management has established, which the management has put for running of its business, for running of its entity, these are being carried out effectively and properly, so that there are no material misstatements in the financial statements. Clear, students? Tests of controls. So if I tell me, students, now if I as an auditor, if I find that tests of controls are working effectively, so what would be my impact on other procedures? Should I increase my area of checking or should I reduce my area of checking? If I am satisfied with tests of controls, if I am satisfied with controls, I have performed tests of controls and I have found that these are working properly. Okay. So what would be impact upon, say, my substantive procedures? Yes, Anup, yes, area of checking should be reduced. And if I find that tests of control, if I find that controls are not working properly, I have performed tests of controls and I find that these are not working properly. So my area of substantive checking would increase. So I would increase my area of checking. Okay. And what are substantive procedure, guys? Substantive procedures, students. Substantive procedures are procedures which are designed to detect material misstatements at assertion level, which are designed to detect material misstatements at assertion level. Now tell me, students, do you know what is meant by assertion? So we would be reading this concept in detail in chapter 4. But do you have basic idea of what do assertion mean? तो इस चैप्टर को समझने के लिए आपको इतना मालूम है कि assertion होती क्या है? Tell me just one thing. substantive procedures are those procedures which are designed to detect material misstatements at assertion level. Now, what is an assertion? Yes, Sadab, you are saying assertion means giving a statement. Yes. What about others? Yes, Priya, Priyanka, Krish. No, no, Priyanka, it is not merely account balance. Assertion, students, I had also briefly explained to you in my first lecture that say the word assertion me is derived from the word assert. Assert means to say something with belief. So just remember in your mind, just establish and register in your mind that virtually everything which is stated in financial statements is an assertion of some kind or another. Well, we'll be doing these in detail in chapter 4. Like say the manage say the there in the financial statements of an entity, say purchases of 20 crores are reflected. So it means that management is asserting, that management is saying that they have made purchases of rupees 20 crore. That in fact purchases have been maintained, that these transactions have in fact occurred. They are also saying that all purchases which need to have been recorded have been recorded. That purchase amount should have been of rupees 20 crore. That nothing is left out. Okay. So, like say, if in the financial statements of an entity, say building is appearing, say of 5 crores. Okay. Then it means that management is asserting that that organization, that entity owns the building. It belongs to the entity. The company or the entity has a right over it. Okay, and it's a written down value after depreciation is 5 crores. And since it is appearing in the financial statements of company, it is being used for the business of the company. So virtually everything which is stated in financial statements is assertion of some kind or another. So just understand this thing. Okay. Clear, guys? You understand the meaning of assertion? Is that clear to you? So substantive procedures are those procedures which are able to detect misstatements at assertion level. Like say, I go to a company for audit and I check sale bill file. Okay, and I say check few entries in the sales account. I check few sale bills. I check stock records. That whatever sale bill is entered in sale account, whether that quantity has been reduced from the stock records. So what I am trying to do, I am performing substantive procedures. I am performing tests of transactions. So tests of transactions are those transactions, those tests, those procedures which are designed to detect material misstatement uh, uh, of class of transactions. Okay, like for those items appearing in statement of profit and loss, of various income items, of various expenditure items, whether these have in fact occurred or not. So similarly, there are tests of balances like trade receivables which are appearing in the financial statements, whether these are genuine or not. So I would be performing tests of balances. I would be sending confirmation requests to them. So if inventory is appearing, so I would attend the physical inventory count. Okay. So these are all these are tests of balances. So these fall in the category of substantive procedures. Remember, understood, guys? And substantive analytical procedures are those procedures when we perform analytical procedures to detect material misstatements at the assertion level. Okay, these we would also be reading in great detail in chapter 4 on audit evidence. So these things are dealt in essay 330, guys. So tell me, guys, one more thing. I ask from you a question so as to test your understanding. So if I, as an auditor, assess risk of material misstatement to be low in some organization, okay, so can I skip performance of substantive procedures? What should be the right approach for me? Can I skip substantive procedures? Why or why not? Yes, guys, tell me. Just do not see the book. It would be very hard to find out. Just apply your own common sense. Yes, Priyanka, you are saying no, but my question is why no? And if yes, why yes? Yes, auditor should apply substantive procedures, but why? Say if I assess risk of material misstatement to be very low, so can I skip substantive procedures? Why or why not? So students, SA 330 states that irrespective of risk of material misstatement, substantive procedures have to be performed. Why? Because number one, because whatever risk we have assessed, this is subjective. So like I have assessed risk of material misstatement to be low, but it is not capable of precise measurement. My judgment, my assessment could be wrong. Okay, so similarly, there are limitations to internal controls. So because of these reasons, substantive procedures have to be performed, because when you perform these procedures, and the nature of procedure is such that these can aid, these can assist the auditor in detecting material misstatements. So when you check sales with sale bills, or when you send confirmation letters to trade receivables, you come to know that whether there is misstatement or not. You can give a finding that there is a misstatement or not. Okay. Here guys, so I have given you an overview of SA 330 also. Okay. So now I will give you an overview of SA 320. That is materiality in planning and performing an audit. Now guys, what is materiality? What is materiality? So the meaning of materiality, its significance, this is all dealt within SA 320. So remember guys that materiality is used in audit in the context of misstatements. Yes, Priyanka, yes, materiality means important, something significant. So Miss SA 320 states that misstatements are material if they individually or in aggregate, they are able to influence the economic decisions of the users of financial statements. So the users who are to take decisions on the basis of financial statements, they get affected. So that thing is material. Okay. So does it mean that, say, uh, only those items which are of large size, only these are material? Say, we'll come into later on. Say I have determined materiality in an audit of financial statements, say of rupees 5 lakh. We'll come to it later on how it is determined. These things will come later on. Say I as an auditor of the company I have determined materiality at rupees 5 lakhs. So does it mean now that only I have to consider items of more than 5 lakhs as material? Yes, guys. Yes, Sadab, you are right. Items of small size can be material. Under what circumstances? Under which circumstances they can be material? Say, say if some employee has considered fraud, say of even of rupees 1 lakh, even that may be material. So although materiality depends upon size, but it is not always a matter of size. it is not always a matter of size. And always remember, students, that whenever something is required by law, whenever something is required by law, whenever something is required by regulation, whenever something is required by applicable financial reporting framework, then it is always material. Like say, you know that financial statements of a company are prepared in accordance with the requirements of Schedule 3. Okay. So if there is some disclosure requirement in accordance with Schedule 3, which is required to be disclosed in the financial statements of a company, then if it is not disclosed, you cannot say that it falls below the materiality amount which has been determined by me in accordance with SA 320. So therefore it is not material. No, that becomes material. Why? Because it has been prescribed by law. It has been prescribed by regulations. Okay. So this point is, guys, also very important. Very important. Never forget that. Like there is a requirement in Schedule 3 of the Companies Act 2013 that if any item of income or expenditure okay, which exceeds 1% of revenue of from operations or rupees 1 lakh, whichever is higher, it has to be disclosed separately. So you have to disclose it separately. Similarly, there is a requirement that details of shareholders holding shares of more than certain prescribed threshold, that is say 5% of total shareholding, they that has also required to be, that is also required to be disclosed. So it also becomes material. Okay. So always remember that materiality is not always a matter of size. It is a matter of size, but not always. And when something is, when prescribed by law or regulation, when some disclosure is required in accordance with law or regulation, it is always material. Clear, guys? So again, remember, guys, a very important point, that materiality is used by the auditor while planning the audit and while performing the audit. So when an auditor plans the audit, he determines the materiality, and while performing, when he obtains audit evidence, he also applies the concept of materiality. This you have to remember always. And now how materiality is determined, guys? How materiality is determined? It is determined on the basis of certain benchmarks. What are benchmarks? Benchmarks means certain yardsticks, certain parameters. So like such parameters can be profit before tax, This can be total revenue. This can be, say, total assets. Now, this depends upon the circumstances and professional judgment of the auditor, which benchmark he has to use. Like say in case of manufacturing companies, we normally use profit before tax. So say I determine materiality. Say if the profit before tax of the company is of a company is say rupees 5 crores. So I set materiality level of say 5%. 5% of profit before tax. Okay. Because now you would say, why 5%? It is not necessary that you set at 5%. It can be anywhere between 5 to 10%. So normally this is the yardstick used by the auditor. There is no hard and fast rule. It depends upon the professional judgment of the auditor. Like now in some cases, the auditor may use some other benchmark, like say there is some entity and that organization, that company is still in startup phase. Okay, so there are no profits because there are no revenues. Even there are no revenues. The company is say expending on capital expenditure. It is creating assets. Okay, so it is in initial stages. So then how would auditor determine materiality? So he may use a percentage of total assets. Okay. Similarly, in certain cases, say in case of some non-profit organization where profit is not a relevant factor, an auditor may use total revenue as a benchmark, as a yardstick. So again, remember guys that objective of auditor as per SA 200 is to obtain reasonable assurance that financial statements as a whole are free from material misstatements. Remember, there is a word in SA 200 in first chapter we have read, material misstatements. So therefore, here lies the importance, here lies the significance of the concept of materiality. Yes, guys, is it clear to you? The concept of materiality is clear to you guys? Yes, Priyanka, Sadab, concept of materiality is clear to you? And students, within this concept of materiality, there is another subset, another topic of performance materiality. So you have to simply understand that when an auditor determines uh, materiality, he at the financial statement level, he also determines performance materiality. So performance materiality is always kept at lower level than the overall materiality. Now, what is, say, if I have uh, determined materiality at 5% of PBT, okay, say that comes to say 5 lakhs. So I would keep performance materiality of certain transactions account balances. I may keep it at say 60% or say 50%. Why this concept? Why this concept of performance materiality? Because there might be possibility that there could be misstatements in different transactions, in different account balances, which when aggregated they might exceed overall materiality. So therefore the auditor um, calculates performance materiality also to keep audit risk at a low level. Okay. Yes, Sadab, you are right. If you fail to detect a material misstatement, but it was immaterial, then there is no effect. Because again, remember the objective of an independent auditor in accordance with SA 200. I have told you what is the objective. Objective is to obtain reasonable assurance that financial statements as a whole are free from material misstatements. You are not supposed to find out petty misstatements. Say I'm just giving you an example. Say of rupees 500, rupees 1000, rupees 10,000. In case of a company which has a profit say in 2 crores or 1 crore, because these are not going to materially reflect upon the opinion of the auditor. Okay. Yes, प्रफुल्ल, you are saying benchmark हमेशा इनकम और एसेट साइड से ही होगा? नहीं, एक्सपेंसिस से भी हो सकता है प्रफुल्ल, हो सकता है, टोटल एक्सपेंसिस से भी हो सकता है. Yes, Priyanka, in performance materiality set of amounts limiting by auditor. Priyanka, your question is not clear. Remember that performance materiality is set at a lower level so as to reduce risk, so as to reduce audit risk at an acceptably low level, so that misstatements which when these are combined together, these do not exceed the overall materiality. So we calculate materiality and then apply a percentage. Then again, a lower level is benchmarked as a performance materiality. Yes. Yes, students. And students, there is another topic in your module. So I have covered important topics of this chapter. That is automated environment. Now, what is automated environment, students? Yes. Yes, Sadab, it depends upon judgment, auditor's judgment. Yes, or what is automated environment? What is automated environment? So students, when an entity uses, it makes use of IT systems for all its business processes, for running its business, right from say from procurement to production to sales to even to some extent even to decision making these days. Okay, so we call it as an automated environment. So when an entity operates in automated environment, uh, then tell me guys whether it is a simple environment or it is a complex environment. When an entity operates in an automated environment, then tell me whether it is a simple environment or a complex environment. Yes, Priyanka, you are right. It is a complex environment. Sadhar, no, it is not simple. It is a complex environment. It is, although automated environment makes business easier, it makes business efficient, but there are risks involved in it. There are IT risks involved in it, and it makes it very complex. So like say you go to a bank, you go to a bank branch, it operates, the banks operate using CBS software, okay, core banking solution. So now it looks simple to you, but it is a complex environment. The banks operate in complex environment. So what are IT risks in automated environment, students? Can you imagine some risks? What are IT risks in an automated environment? Just think from your own logic, from on your own common sense. Yes, yes, Sadab, yes, hacker, change to programs, unauthorized access to data. Say, suppose if there is if some program is faulty, some command is faulty, then whole calculations would be wrong. There is a risk of say theft of data, loss of data. Okay, bugs, virus, yes, that is also correct. Confidential information can be lost. So these are all IT risks. These are all IT risks involved in an automated environment. Like say, like again, I am giving you example of a bank. Say, say you have taken loan from bank, so banks do not apply interest manually. So what they would be doing at the end of month, the software would apply the interest in all loan accounts at the bank level. Okay. So say if there is some problem, if there is some wrong instruction which has been put into software, then it would affect all accounts at the whole bank level, at the all India level. So such type of risks are known as IT risks. Okay. Yes, Ashok, now you can unmute the students. Yes, students, now you can ask the questions. You can talk to me. Yes, any student who wants to ask a question relating to this chapter? Yes, anyone, guys? Or otherwise, we can do some test your understanding.
I think we can continue with the test of understanding, sir.
Okay,
And
okay, ma'am.
students, one thing you all are required to mention your name along with your registration number. So like I'm Karuna, so Karuna, and then my registration number should come with my name. Sir, you can continue. Over to you, sir.
Yes. Thank you, ma'am. So, guys, look at this question, test your understanding 4. Jojo Limited is planning to list on Bombay Stock Exchange next year. As an auditor of Jojo Limited, identify any one reason of increased audit risk due to listing of the company next year. Yes, students, can you attempt this? There is a company, Jojo Limited. It wants to list on Bombay Stock Exchange next year. So you are performing audit of the company in this year. You come to know that the company is planning to list. Its shares are going to be listed on stock exchange. So identify any one reason of increased audit risk. So the question itself is saying to you that there is increased audit risk. So
Sir,
what could be the reason? Yes, Shadab.
Sir, maybe he is trying to increase his revenues, his profit to get high value in stock exchange to get more.
Yes, that's a right reason. Yes, there is a chance, Shadab, that company may show intentionally show better results, which are not there actually, so that its issue gets good response. So you are saying rightly, Shadab.
Okay, sir. Thank you.
So the company may show a rosy picture. The company, so this is the reason of increased audit risk. The question itself is saying reason of that audit risk is increased, but you have to tell what is the reason of increased audit risk. Okay. So now let us see test your understanding 3. Now read this question. Ch3 Foods Private Limited is engaged in manufacturing of bread. So the auditors of company have planned audit procedures in respect of recognition of revenues of the company. So the auditors have planned the procedures. Okay. In respect of recognition of revenues. So they want to be sure that revenues are okay. These are not fake. These are genuine. These are complete. So despite that, there is a possibility that misstatements in revenue recognition are not identified. So which risk is being alluded to? Alluded means being referred to. What is being indicated? Yes, what should be the answer? Yes, anyone?
Yes, sir. I think it would be the detection risk.
Yes. Who is speaking? Shadab.
Yes, sir. Shadab.
Yes, Shadab, great. It is detection risk because the question is referring that planned procedures may not be able to detect material misstatements in respect of revenue recognition. So it is detection risk because this is the very definition of detection risk. Clear? So, and the one student, Prafulgiri, he is saying, please explain mathematical explanation of audit risk in Hindi. Yes. Praful, have you joined Zoom link? Can you talk to me? Or you are watching on YouTube? Yes, Praful, or you on YouTube, or you have logged in on the Zoom. So probably I assume that you are on YouTube. So I would explain to you in Hindi. प्रफुल्ल, हमने समझा था कि ऑडिट रिस्क जो है उसके दो कंपोनेंट हैं. उसके दो कंपोनेंट कौन से हैं? रिस्क ऑफ मटेरियल मिसस्टेटमेंट और डिटेक्शन रिस्क. रिस्क ऑफ मटेरियल मिसस्टेटमेंट के को आगे दो में डिवाइड किया जा सकता है. वो है इनहेरेंट रिस्क और कंट्रोल रिस्क. सो ऑडिट रिस्क इज इक्वल टू इनहेरेंट रिस्क मल्टीप्लाइड बाय कंट्रोल रिस्क मल्टीप्लाइड बाय डिटेक्शन रिस्क. अगर इसमें से कोई सा भी रिस्क बढ़ जाएगा तो उसका मल्टीप्लाइंग इफेक्ट पड़ेगा टोटल ऑडिट रिस्क पे, क्योंकि ऑडिट रिस्क मेरा उससे कई गुना बढ़ जाएगा. और आपको यह भी समझना है कि रिस्क ऑफ मटेरियल मिसस्टेटमेंट और डिटेक्शन रिस्क का इनवर्स रिलेशनशिप है. जैसे कि इस फॉर्मूले से ही आप डिराइव कर सकते हो कि डिटेक्शन रिस्क इज इक्वल टू ऑडिट रिस्क डिवाइडेड बाय रिस्क ऑफ मटेरियल मिसस्टेटमेंट. सो डिटेक्शन रिस्क और रिस्क ऑफ मटेरियल मिसस्टेटमेंट का इनवर्स रिलेशनशिप है. अगर एक चीज बढ़ेगी तो दूसरी घटेगी. अगर रिस्क ऑफ मटेरियल मिसस्टेटमेंट मेरा ज्यादा है तो मैं डिटेक्शन रिस्क को लो रख सकता हूं. मेरे पास उसकी लिबर्टी है कि मैं अपना टाइम वेस्ट ना करूं ज्यादा, मैं एफिशिएंटली ऑडिट परफॉर्म कर सकूं. क्लियर? यस प्रफुल्ल, इज इट क्लियर टू यू? और अगर मेरा रिस्क ऑफ मटेरियल मिसस्टेटमेंट लो है तो मैं डिटेक्शन रिस्क को हाई कर सकता हूं. मैं उसका बेंचमार्क थोड़ा ऊपर कर सकता हूं. मैं सैंपल साइज थोड़ा छोटा रख सकता हूं. मेरे को ज्यादा काम करने को मैं अवॉइड कर सकता हूं. वो तभी कर पाऊंगा अगर मैं रिस्क ऑफ मटेरियल मिसस्टेटमेंट मैंने प्रॉपरली असेस किया होगा. यस प्रफुल्ल, इज इट क्लियर टू यू? Yes, confirm, Praful. Is the topic clear to you? Yes, Anup, you are asking, is there any difference of material misstatements at assertion level and at financial statement level. Anup, you have to understand that the auditor has to assess the risk of material misstatement at overall financial statement level and also in related to all assertions. This is required in accordance with SA 315. Now, say I would assess, say I have seen the financial statements of an entity. So I would assess the risk of financial statements at overall level and also at different assertions level, say at level of sales or at level of different expenditures. Yes, Sanatan, you have raised your hand.
Yes, sir. Hello. I
Yes.
want to ask a question, sir.
Yes, yes.
Test your understanding code at 3.16 page. That's Jojo Limited is planning to list on Bombay Stock Exchange next year.
Yes.
And how it can increase the audit risk of an auditor, sir.
Yes, yes.
I want to please explain.
No, I have
Because
already
audit,
explained.
sir. Hello, sir. Because audit is a past year engagement.
No, that is correct. But the question is saying that there is you have to see that the company is going to be listed in next year. So the past year results may be manipulated because the company may want to show its rosy picture in past years so that it gets good response in next year. Yes, have you understood? Yes, Sanatan?
Oh.
Audit is definitely. समझ गए?
हाँ सर समझा.
Okay, okay. Yes, Shadab.
Sir,
Yes.
sir, in which kind of transactions we apply the concept of performance materiality rather than
It
the
can be
normal
applied
materiality?
to any kind of transactions.
Sir, then how to determine that would we have to apply the materiality or performance materiality?
So when we determine total overall materiality, then we keep performance materiality of account balances of transactions at a limit which is lower than the overall materiality. Okay.
Yes, sir, it is clear, but I am confused that in transactions like if we set the limit of too low
like
for
say I calculate performance materiality in respect of sales, okay, which is kept at a lower percentage than the overall materiality. Similarly, other transactions of purchases of other major expenses, I can keep it at a lower level than overall materiality. Some other petty expenses I can leave out. Okay.
Okay, sir. Now clear.
Yes.
Sir?
Yes. Priyanka.
Yes, sir. ये सब
Yes,
परफॉर्मेंस
Priyanka.
मटेरियलिटी तो परफॉर्मेंस मटेरियलिटी में अमाउंट्स जो ऑडिटर खुद सेट करता है कि लाइक हमें 5% लेना है कि 10% लेना
हाँ
है.
हाँ, ऑडिटर का ही रिस्पॉन्सिबिलिटी है, ऑडिटर सेट करता है, मैनेजमेंट का कोई रोल नहीं है इसमें.
ओके सर. और सर
क्योंकि
परफॉर्मेंस
मेटेरियलिटी डिटरमिन करना ऑडिटर की रिस्पॉन्सिबिलिटी है. मेटेरियलिटी is used in planning and performing an audit. It is fundamental to the process of audit.
ओके सर. और सर ओवरऑल मटेरियलिटी में जो है परफॉर्मेंस मटेरियलिटी उसका एक पार्ट बनता है ना.
हाँ, उसका पार्ट बनता है. उसका कंसेप्ट आपको सिर्फ इतना समझना है, आपको ज्यादा इसमें परेशान होने की जरूरत नहीं है. आप सिर्फ उसमें इतना समझिए कि परफॉर्मेंस मेटेरियलिटी को ओवरऑल मेटेरियलिटी से लो रखते हैं और उसका रीजन ये है, लो इसलिए रखा जाता है ताकि जो मिस स्टेटमेंट्स कई ट्रांजेक्शन्स की मिला के, कई अकाउंट्स की मिला के ओवरऑल मेटेरियलिटी से बढ़ ना जाए.
ओके सर।
ठीक है, बस आप इतना समझिए और मेटेरियलिटी के बेंचमार्क्स याद रखिए। जो
ओके
मैंने
सर।
इंपॉर्टेंट चीजें आपको बताई हैं कि मेटेरियलिटी इज नॉट ऑलवेज ए मैटर ऑफ साइज। अगर कोई चीज डिस्क्लोजर एप्लीकेबल फाइनेंशियल रिपोर्टिंग फ्रेमवर्क के हिसाब से चाहिए तो वो भी मटेरियल बन जाएगा। कोई लॉ में चीज प्रेस्क्राइब्ड है तो वो मटेरियल बन जाएगी, चाहे छोटे अमाउंट की क्यों ना हो।
ठीक है सर, उसके पैरामीटर्स पे भी हम ध्यान देंगे।
हाँ हाँ, पैरामीटर्स बेंचमार्क्स पे बिल्कुल ध्यान देना है। ठीक है।
ओके सर। ओके सर,
यस,
थैंक यू सर।
एनीवन एल्स? Yes, anybody else? So we take another question. See, test your understanding 6. Yes, guys, read this question and do not see answer from the back, guys. It would defeat the whole exercise. Test your understanding 6, guys. Read this question. Students, first of all, tell me whether you have understood this question or not.
यस सर, वी अंडरस्टैंड सर। ये डिस्क्लोजर ऑफ नेचर ऑफ लोन का पूछ रहे हैं, जिसमें हमें ये डिस्क्लोज करना पड़ेगा कि नेचर ऑफ लोन है क्या, क्योंकि मटेरियल हो सकता है। अगर ये अनसिक्योर्ड लोन रहा और सिक्योर्ड लोन रहा तो इसमें डिफरेंस करना पड़ जाएगा।
नहीं, ये मटेरियल है या नहीं है?
Yes, sir, it
सर
is
मटेरियल। मटेरियल।
मटेरियल है सर।
मटेरियल क्यों है?
because
प्रियंका, आप बताएं।
क्योंकि सर डिस्क्लोजर रिक्वायर्ड है।
हाँ, डिस्क्लोजर रिक्वायर्ड है शेड्यूल 3 के हिसाब से। तो
यस
जो
सर।
भी मैंने आपको बताया, जो भी लॉ में प्रेस्क्राइब्ड है तो वो तो हमेशा ही मटेरियल होता है। अगर लॉ में कुछ लिखा है या एप्लीकेबल फाइनेंशियल रिपोर्टिंग भी तो लॉ से ही फ्लो करता है ना, तो शेड्यूल 3 भी तो कंपनीज एक्ट का ही पार्ट है।
यस
ओके,
सर।
तो वो जो है वो हर एक चीज मटेरियल हो जाती है, चाहे वो कितनी ही छोटी क्यों ना हो।
ओके सर।
ठीक है।
यस सर।
ये स्टूडेंट्स क्वेश्चन नंबर, ये टेस्ट योर अंडरस्टैंडिंग 8 देखिए। ये कंसेप्ट वैसे मैंने डिस्कस नहीं किया लेकिन बहुत सिंपल है, आप इसको देख कर सकते हैं। यस, तो स्टूडेंट्स मैं आपको बता ही देता हूं, इसमें ब्रीफ कर देता हूं थोड़ा। आई वुड गिव ए ब्रीफिंग अपॉन यू वॉट एवर वी हैव लर्नड इन इंटरनल कंट्रोल। सो you can understand for theoretical framework internal control can be divided into 5 components. It can be divided into 5 components. So these components are listed in your module. You can, I would just give a briefing to you. So one thing is control environment. Now what is control environment? Control environment is the total environment in which the entity, in which the company is functioning. Okay, so like what kind of management is, so whether company takes care of its employees well, whether it properly trains its employees, whether it gives a proper compensation to its employees, how is the say corporate culture all about. So these kind of things, whether the management is honest, whether they are not unscrupulous or fraudulent people. So say if the management is honest, then they would also devise controls, and they would also want that everything should go according to the controls. Okay, so this broadly we can we can understand as control environment. Another component of internal control is risk assessment process. Now what we have learned right now is the audit risk. Now this internal control, this component talks about business risk of the entity. Like say some new competitor has come, so how I would respond to that, how I would identify the risk, how I would assess the risk, how I would respond to the challenges thrown by some new technology or new competitor which has come. So the company, the organization also identifies its business risk. This is also part of the internal control system. Another thing is number 3 is information system. Information system is the system by which financial reporting is done. Like it includes hardware, software, people, procedures, data, because these are all responsible for preparation of financial reporting. And fourth is control activities. Now control activities means now what the controls the management has devised, whether these are operating. Now it is also part of the internal control system. Okay, so like the management makes performance reviews, it has ensured segregation of duties. So this is dealt with here. So this concept segregation of duties is very important, students. And why it is important? Because it shows that management has taken care that no two persons are able to collude. Okay, so she is performing, she is assessing control activities as part of evaluating internal control. Okay. Yes, Praful, you are asking, can we take professional help to decide materiality because we can study all laws at a whole? Other professional help. So materiality would have to be determined by the auditor. It relates to financial statements. So auditor would be in a best position to judge materiality. Yes, anyone else? Anyone else, guys? So guys, these methods of evaluation of internal control, this आपको इसमें से कुछ पूछना है? Because this topic I have not covered, because it is quite simple. इवेल्युएशन ऑफ इंटरनल कंट्रोल, इसमें आपको कुछ पूछना है? इनमें कोई डिफरेंस ना समझ में आ रहा हो? नरेटिव, चेकलिस्ट, इंटरनल कंट्रोल क्वेश्चनियर, फ्लो चार्ट में yes, any student who wants to ask? Any question relating to this chapter? Any query, any doubts, guys?
सर नैरेटिव रिकॉर्ड हिंदी में बता दीजिए एक बार.
यस प्रियंका, नरेटिव रिकॉर्ड का मतलब होता है कि जो भी ऑडिटर ने देखा इंटरनल कंट्रोल के बारे में, वो सब उसको राइटिंग फॉर्म में डॉक्यूमेंट करे कि ऐसे ऐसे इंटरनल कंट्रोल परचेजेस का ये सिस्टम है, सेल्स का ये सिस्टम है, उसका से कैश हैंडल करने का ये सिस्टम है, इन लोगों को ड्यूटीज असाइन की गई हैं, वो सब कुछ लिखे। ओके, इसको नरेटिव रिकॉर्ड कहते हैं। लेकिन ये छोटी ऑर्गेनाइजेशंस में सिस्टम सुटेबल है, जहां बड़ी बड़ी कंपनीज हैं वहां पे ये सिस्टम सुटेबल नहीं है। वहां पे ऑब्वियसली आपको इंटरनल कंट्रोल क्वेश्चनियर या चेकलिस्ट पे भरोसा करना पड़ेगा, फ्लो चार्ट भी है उसमें। ठीक है, तो इंटरनल नरेटिव रिकॉर्ड जो है वो छोटी एंटिटीज के लिए ठीक है, जहां पे आपको डिटेल्ड क्वेश्चनियर भेजने की जरूरत नहीं है, और जहां पे आपने जैसा इंटरनल कंट्रोल सिस्टम ऑपरेशन में देखा उसको आपने जॉट डाउन कर लिया, ये मतलब है इसका।
सर अगर स्मॉल बिजनेसेस में वो अपना सिस्टम चेंज करते रहते हैं रिकॉर्डिंग करने का, तो उसको कैसे हम नोट करेंगे?
नहीं, जो जो सिस्टम इन एग्जिस्टेंस होगा उसी उसी पे तो ऑडिटर देखेगा। जो सिस्टम, जो इंटरनल कंट्रोल का सिस्टम जो ऑपरेशन में होगा उसी को तो ऑडिटर चेक करेगा।
ओके
और
सर।
अगर उन्होंने कोई मान लीजिए चेंज कर लिया तो उसको भी अकाउंट फॉर करेगा।
ओके सर।
यस, एनीवन एल्स? एनीबॉडी एल्स गाइस? यस करुणा मैम, यू वांट टू ऐड समथिंग?
Nothing, sir. Thank you. You have
ओके,
nicely explained and covered. And students, I think till now you might have understood the pattern which we are going to follow for future classes also. All the recorded lectures are being uploaded on ICAI BS Knowledge Portal and on mobile app. So again, we are having session on 16th and we'll be covering chapter 4. So till the time you just revise all the chapters, and if you have any doubt, you can go with it. You can ask the doubt in the session, and sir will be again covering, revising you, will be helping you in learning and revising the chapter, and your doubts he will be taking. And again, if time permits, we will be practicing question and answer also. So thank you to you, sir. Thanks a lot. And
thanks ma'am.
to all the students. And if you want to add on, sir, you can also. Yeah.
Okay. So students, today we have given the overview of chapter 3. So day after tomorrow we will be discussing main features, main points which are there in chapter 4. So come prepared if you have any query. Okay. So that's all for tonight. Thank you. Thank you,
Thank you,
guys.
sir. Thank you, ma'am.
Thank you, sir. Thank you, dear students. Thanks a lot.
Okay.
Ashok ji, we can conclude.
Thanks, ma'am.
Thank you.